Amazon, now the second U.S. company after Apple to hit a $1 trillion in market valuation. We discussed this and other things with Jonas Ferris. He's the MaxFunds.com co-founder, also an FBN contributor. Good morning, Jonas.
Good morning.
I was reading Forbes did an exclusive with Jeff Bezos, and they called him Bezos Unbound, meaning he never thinks about the current quarter. He's always thinking about the future. Where is the company going to be 2 years from now? What is the future for Amazon shareholders and the company, in your opinion?
It's a good thing because he had so many quarters of losses in the beginning.
True.
The future is very great, but there's also a situation where they're becoming so big that their growth is going to mimic more the economy at some point. It happened to a lot of companies at one point, but like at $1 trillion, the economy is around 20 trillion. You're not just going to keep growing double digits forever. You're going to hit this wall, which is the global economy growth rate, which is pretty slow compared to Amazon, obviously. They're not there necessarily now, but you've got to be able to produce earnings, 50 billion a year forever to support this. And that's hard to do in tech. Competitors come up. No one can see that now, but it didn't look like, AOL had competitors or Cisco or anybody else who collapsed after being a huge company. At one point, Walmart didn't see Amazon coming. So I just think it's not like it's going to collapse 80% like the NASDAQ crash in 2000, but it's also fully valued for the likely growth rates of the next 20 years, so to say.
That's an interesting take, though. Amazon is almost a bellwether because they're so diversified as the entire U.S. economy. I also want to talk to you about trade and how this figures into the corporate bottom lines and also the economic numbers that we're getting. We have the U.S. and Canada NAFTA trade talks. They resume today. At the same time, tomorrow, we might see U.S. tariffs on another $200 billion worth of Chinese products. With Canada and China two wild cards now. How do investors play this?
Right now, investors are very scared of how the losers are doing in this equation right now, which is emerging markets. And right now, these stocks and the bonds and a lot of these emerging markets are really on the edge of crisis. It's not like a full-blown crisis yet, but people think they're going to lose. And the money's flowing to America. Our dollar is rising, possibly too high. It's not a good time to be investing in a country that could get the full hit of the tariff war with America. It doesn't mean it's going to be good for us either in the long run, but right now, and there's other reasons some of these economies are falling apart right now, but part of it is the global trade situation.
And I have to imagine that American companies and U.S. multinationals are perhaps, even though the economic climate in the U.S. is very strong right now, they're maybe ambivalent about growing themselves too much because what if we have a trade war? So what does the Federal Reserve do in a situation like this? And they have more meat to sink their teeth into on Friday. They get the August jobs report.
Yeah, I can't imagine an economic report so hot that would lead the Federal Reserve at this stage of the trade war to just raise interest rates to 4%. So that's just not going to happen because our dollar's already getting too high. They don't know what economic drag we're going to get from a trade war. It's kind of uncharted territory. There hasn't really been a trade war on a global scale. So we can't just, I think we're going to have to wait and see. And I think companies are waiting and see for hiring. We're going to see relatively slow job growth because of it as people see where this plays out.
Yeah. All right, Jonas, thank you very much for your perspective this morning. Have a good day.
You too.